This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Eric Levine, founder and CEO of Eric Levine Global. Eric, thank you for joining us.
Oh, it's my pleasure, Hall. Thank you for having me.
So what was your background before investing in early stage companies?
You know, I started off as an actor. I was right out of the get-go. My dad was an athlete, so he was on the Canadian water polo team and volleyball team. He was best friends with the Weeder brothers, who kind of started the whole bodybuilding muscle and fitness magazine. And so I was into that whole gym thing growing up. So naturally, at the very first shot at it, I'm going to get into the fitness industry. And I did that as early as I was about 22 when I started investing in my own company.
Well, that's great. And so what excites you right now?
Well, again, in the fitness industry, as you know, with COVID, around the world, the government has shut down fitness centers, even though the data is clear that we're not a transporter of COVID. I mean, it's clear, and it's independent studies around the world have shown that. Nevertheless, so many of my colleagues have been forced to shut month after month and then restart, make a deal with the landlords, and then pay the staff, and then only to be shut down again a week or two or three later. I mean, it's insane. So I'm here looking at helping as many people as I can, getting their feet back, because it's a very interesting time, as you can imagine, in our industry as well as all the other industries. But specifically in our group, a lot of online product has come out, which is wonderful. People are still scared to go back into the fitness world. So I'm looking at many opportunities myself personally. Unfortunately, there are many opportunities that came about through COVID that wouldn't or shouldn't have happened. But smart investors can see distressed situations. And my group is looking at those, as well as our moral viewpoint, if you want to look at it, is these operators that got in trouble or had to close up wasn't necessarily their fault. And wherever possible, we're looking at coming through this situation and keeping them on board in some sort of an equity position, operations, etc. So it's not a complete catastrophe. It's a way of building their fortune back up. So that's kind of what we're looking at. That's kind of what's pretty exciting right now. And the banks realize this. And some of the banks are very flexible in their viewpoint on today, how to get most of their money back and make this a win situation.
Great. So you see a lot of startups and a lot of investors in this space. What's your advice for people investing in startups in the fitness sector? What do you tell them to do before they write that check?
Well, if they're, they have to look at the operator's track record. For some reason, the fitness industry has attracted many hobbyists, people that like to exercise, but they don't have the experience to run a fitness center. It looks easy. It's not like Field of Dreams. Build it and they will come. Procrastination is our number one enemy. And everyone says tomorrow. How do you get them to say now and let me bring in a friend? So if you're investing in a startup, it's all about the operator. What is the experience, in that person or that team? You can't back a rookie situation. Not now. We're in a very unique situation. We're not sure how many of the old members are still going to come back or in that area, etc. So for an investor, I'd be investing in companies that have a good long track record. If you yourself have been in the industry quite some time, you've been an executive and this is your shot, look for an opportunity like we are, a distressed situation whereby you can pick up the clubs for pennies on the dollar. The banks will, and the landlords will be flexible. They should be, because there's so much product on the market. I mean, retail is everywhere. It's all available. So you got to make a deal with the landlord. You have to trust in the operator. If that operator is you, make sure that the landlord has put in COVID language, whereby if you're legally shut down, you're not paying anything, and flexibility from them. You need 3 to 6 months rent free, and go for it. Find the right up. There's so much fitness equipment out there. You don't pay anything. You know, a treadmill is $10,000 plus new. You can pick them up for $1,000 each right now. So
Wow.
Be smart. Yeah, there's opportunity if you're placed well.
So what's your advice for people running startups in this sector? You talk about being a good operator, but what do you tell them to do before they go out to raise funding?
Well, they have to find an excellent location that was profitable in the past, but had to be shut down due to unforeseen circumstances. A landlord put the package together that shows that the old run rate of $50,000 a month rent is now $30,000 with 6 months rent free, and is never going back to 50. So that extra $15,000, $20,000 of EBITDA monthly goes to the bottom line. Now you put a package together where the investor sees pre-COVID, this company was doing all right. Post-COVID, with the deductions that you're getting from the landlords and your track record of having such a great long run doing what you were doing, it's a very attractive parcel for any investor that's looking to get into the health, fitness, wellness arena.
Well, that's great. So let's talk about the industry itself. It's changing dramatically. Where do you see it evolving from here?
Well, a ton of money has gone into the home fitness markets, starting with Peloton a couple of years ago. I mean, the valuation has gone up kind of like Bitcoin or more. Apple is now into it. Everyone is doing it, all the big players. What it did do was, obviously during the pandemic, allowed people to work out at home with a much higher quality of experience. I mean, Peloton bikes are not cheap. The mirror is not cheap, but people are paying for it because it's a long-term investment in themselves. And that's going to continue. I don't think that segment will go away when the brick and mortar clubs reopen. That being said, the brick and mortar has a never-ending story with society. It's a place to meet friends. It's a place to be motivated. It's a place to grow, to get healthy. It's a healthy nightclub. It's a healthy bar. And that'll never go away. Some people will be afraid for a while, until everything is, whatever the words are, herd mentality, whenever it's all clear. And some will stay with their home units. But I'm looking at the people that have the brick and mortar clubs to have your own online system where it's a help. It's a new tool to keep your members happy when they can't come to your club, and to attract people that are never going to come to your club, but your online product is so good that they'll pay you a reduced membership fee anyway. So the online is huge. It's gone, probably 100 times bigger than it was pre-COVID. And yes, it'll slow down, but it's not going to be something that won't be a good investment over the next year, 3 and 5 years. It'll be a great investment.
Great. And so let's talk about your investment thesis in this segment. What do you look for a good fitness club? Aside from operators and location, what makes for a good investment opportunity?
Well, for me, we're able to, with my group, I'm also a partner in New Evolution Ventures, and my partner is Mark Mestrov, probably the most one of the most important people in the industry. So fortunately, we're actually given many opportunities. The banks know us. We've been very successful in doing what we're doing now by taking over some distressed situations and turning them around for the bank. I mean, the banks have lots of money out there. And if you can show the bank that they can get 50 cents back on the dollar in 3 or 5 years, they're all ears, because no one expected what everyone's gone through. And there's a lot of good people out there that got hurt without any warning, as we talked about earlier. So for us, we're in a position that we're actually given opportunities, as well as we're on the mark. We're looking. We're in the flow chart of what's going on around the world, and so we're privy to a lot of early situations that aren't all the way done yet. But we're looking through situations that go through a BK, which go through a car wash, as they say, come out the other side without any liability, with a bank that is passionate about getting their money back, backing us as operators, giving them an equity stake, and moving forward as a team. And that seems to be a very strong winning formula.
That's great. So let's talk about the challenges in the space today. What do you see as the challenges for the startup?
Well, fear. The media constantly. It's just I've been around the world. I've never seen where media thinks it's their job to destroy everybody's positivity. And that's the way it seems. Whether it's fake news, which I believe a lot of it is, but the sentiment of fear. I mean, caution, yes. Awareness, yes. Information, absolutely. But fear-based doesn't do anybody any good. So that misinformation, fear-based reporting is something that we all have to be aware of in a startup. If you're taking over an existing club or clubs, how did they handle the membership on the way down before closing? How do they communicate with the members? Do the members still feel like they're members? Do the members want to come back? Are you a marketing specialist? Do you know how to get them back? I mean, people are people, and they need to have the right motivation. They need to feel good about it. They need to feel safe. In this, were the previous people honest and great communicators? Because I've seen both. I've seen where companies kept billing their membership through the pandemic, and I've seen where it hasn't been that way. So make sure before you invest that the membership that you think you're buying is there. Because even in a beautiful situation where the club owners handled it properly, you're probably looking at 50% or less returning in the first 90 days to 6 months. You'll build it back up, but make sure your flexibility with the landlord is there, the bank, all creditors are understanding of the situation. If you're able to take it out of a BK car wash situation, that's not as important. But don't count on the old membership to be anywhere near the levels that it was before. And be prepared to market your product, and be very aggressive on the amount of spend you're going to need to attract the old members back, then bring in a friend, and all the new members.
Right. Well, there's many different kinds of fitness centers out there. There's yoga, there's Pilates, there's a variety of different things out there, weight, strength, and otherwise, those with amenities, those without amenities. If you had to pick one or two of those types that you think are good opportunities for investors to pursue, what would you put at the top of the list?
Well, again, it depends on a lot of variables: location, experience, competition. But on a broad stroke, The problem at the moment with the latest surge in the last few years is boutiques, your spinning clubs, your boxing clubs, your Pilates studios, etc. And they did extremely well. The problem that they're having now is the spacing issue. The governments have gone from 6 feet to 12 feet, which brings a spinning studio down from 60 bikes to 20 bikes. You got to pay the instructor, you're paying the rent, you're paying all the other stuff. How do you go with 1/3 revenue? So unless that is figured out, the boutiques will be hurt because of that, just that, for instance. In my opinion, in the next year or two, the ideal would be low-cost, high-value situations in neighborhoods with excellent parking, with a good reputation. People don't mind spending $15 a month or $10 every 2 weeks to check it out and see how I feel. Am I using it? Because, I mean, quite honestly, the low-cost, high-value clubs I've seen around the world, there's nothing better. You're not going to get that, that value anywhere else. You have a multi-million-dollar facility available for you 30 days a month for $10, $15, $20 a month. It's the value is much, much more than the investment that the members are required to make. And in this uncertain time, that's where I would go.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Well, I think that for all the entrepreneurs out there, it is a great time for you to join forces with an experienced group. If you have money, you've done well now, and you have some money set aside, you want to join an experienced group, there are many people out there that are looking for partners. They're looking for investors right now. So there's many industry circulations online. Go on LinkedIn. There's many ways of finding opportunities. Don't do it yourself, but join an experienced group would be the way to go. And the fitness industry is here forever. Every industry has been hurt, but now that it's reopening, there will be a resurgence of power because everyone's gained 10 or 15 pounds. We all aren't at our best, but we all are ready to do it again. So that's what I would recommend.
Well, great. Well, how best for listeners to get back in touch with you?
Well, but simply they can reach me at Eric Levine global.com, EricLevine global.com. That's the easiest way. I'm on LinkedIn, the same address.
Well, great. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thank you very much. It's been great. I appreciate it. Thank you.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.